Hello, everybody, and welcome to a special edition of the Tatiana Show. We have so many different time zones represented here in today's show and so many different technical challenges. But we are gathered here today to talk to you about Cordano, ZenCash, the IOHK partnership, and all sorts of things crypto. I am in a terribly loud recording environment, so Josh is going to lead the program today. I'm going to drop off and catch up with you guys later. But I'm excited for our guests, and I wish that I wasn't in hell. But I'm sure you guys will have a really good time together, and I'm really excited to welcome both of our guests on today. We've got Charles Hoskinson, first-time guest on the show, man who needs no introduction, but Josh will handle that. and then we've got Rob from ZenCash, which I know you all know how much I love ZenCash. So yeah, super fun stuff. I will catch up with you guys next week, and also make sure if you're in San Francisco, which is where I'm at right now, and where Rob is at as well. We are doing the World Crypto Economic Forum, and that's going on Monday and Tuesday. So check out my website, tatianarose.com. On the events page, you can find out more information, or go to wcef.co, and you'll get the information there. And bye.
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 Well, welcome, Charles Hoskinson. It's lovely to have you on the show. Thank you very much for taking the time. I know you're a busy guy.
Yeah, I'm sorry I don't have as much time as I'd like to spend with you guys, but happy to be here for as much as I can.
I understand. So for a quick introduction for yourself, well, please introduce yourself to the crowd. You started off way back when in cryptography and moved on from there.
Well, I started as a mathematician. There's like a huge difference between a mathematician and a cryptographer. Cryptographers tend to worry about worlds that probably aren't issues or may be issues at some point. And mathematicians worry about worlds that will never be issues, like sizes of infinity, and in my case, how to factor integers and these things. So I wanted to have a job that had absolutely no impact on society whatsoever. And I tried really hard to be as pure and abstract as possible. But at some point I got bit by the gold bug and by the Paul bug. And that pulled me into politics.
Sorry, something's happened to your microphone.
You guys hear me?
Oh, there we go. It's back to normal. It went really crazy.
Oh, I'm sorry about that. Yeah, so at some point, I got bit by the gold bug and by the politics bug. And, I joined the Ron Paul campaign in 2007, and I started reading books about monetary policy and Austrian economics and these things. And, once you go down that rabbit hole, there's no going back. So I said, okay, it's probably a real good idea that I do something involving the intersection of money and technology. And then Bitcoin came out, and it was a very natural thing. So I became an entrepreneur in the space at some point. And I've done a couple of ventures that people probably know me from. The two most prominent are Ethereum and Cordano. And I run a company now called IOHK. And basically, we're a protocols company. So we study the science of cryptocurrencies, and we also do the engineering. And we work on projects like Cordano and ZenCash and ETC, for example. And we have some that are unannounced.
Fantastic. Yeah, it's a really exciting company, and it's nice to see now that we have digital currencies, a funding model for protocols, for actually developing protocols, which has generally been just the area for people to geek out on. Not really.
We've been treating protocols for like broccoli as a space. Like it's that thing on your plate that you have to eat because your mom said so, but you don't want to. And the reality is that broccoli can be quite good for you. And so we're the broccoli company. We specialize in eating that and making it tasty, and working on it and growing it and so forth. So there's a love-hate relationship with us and the rest of the space.
So what everyone, I guess, wants to hear about is Cardano. It's been in the headlines like crazy recently. It's moved up in the market cap, whatever you take from that. But I just wanted to quickly talk about it like a VC would, and because I like to, there's so many scams in this space. There's so many tokens and coins, and there's newbies coming on board going, what do I invest in? It's a crazy landscape. So generally, what I do is I tell people, look at it like a VC. First, does it solve a problem? Does it not? What does it solve? And then have a look at the GitHub. What's the community like? What are the developers like? What's the talent like? Then what's the crypto economics? I moved into that. And then what's the community like? And how transparent is the whole project? So let's start with what problem does it solve? Why do we need another token? Why do we need ADA?
Well, the way I like to look at this stuff is that there's like this promise of cryptocurrencies, the things that we keep seeing on the label that says, oh, well, cryptocurrencies are going to do X, Y, and Z. You know, and for me, X, Y, and Z was always saying, I want to have the lowest cost financial system in the world that works on my cell phone, and I can teleport value anywhere in the world, and I can build contracts and relationships on top of that value with other people. And I can do this without the need of a government or a central third party. That's always been kind of the promise on the label for cryptocurrency. So you'll hear things
the unbanked.
You'll hear things like remittances. You'll hear things like developing world banking inclusion and so forth. So what we're discovering is that building a world money system that has value and principles and can't be corrupted or coerced by Byzantine actors, whether they be hackers living in their mom's basement or organized crime or the biggest organized crime, governments. In all of those cases, it's real hard to, it's real hard to do that. In fact, the greatest enemy tends to be ourselves, we the developers and we the community, because if we start getting successful, we start getting rich, and then suddenly our values become a bit less important.
Yeah, right.
So,
you see that with Ripple. All of us, Ben Bernanke was the big bad guy, and Ben Lawsky, and now they're all working for Ripple, and everyone's cheering. Yeah, look, we've got Ben.
Yeah, right, because they're getting rich. They're getting rich, right? So it's very tempting to eat from that fruit. So what we recognize is that you need to approach this generationally, and each generation solves a different problem. So the first generation, what it solved was the psychology problem of, can a non-state actor issue something? Can you do that issuance online and have digital scarcity? Can it be completely decentralized? And can that achieve real value? That in itself is worth like more than people can imagine. That's what Bitcoin tackled. Before Bitcoin, there was no decentralized internet money that didn't have a company or a promise at the end of the rainbow. I mean, this was as extreme and in cypherpunk as you could get, man. You just like got this magic token, and you're like, okay, I don't know who made it or where I got it from, but I trust this system, and I'm gonna go spend dollars to tens of dollars to hundreds of dollars. Now it's tens of thousands of dollars on this magic internet money. So that was a psychological barrier, and that's what the first generation was all about. But it's not a payment system. It's not necessarily private. It's got millions of little wonky problems, and the transactions are pretty dumb. You can only do a collection of things, and it doesn't map to reality where you need to do lots of things. So the next generation was about saying, now that we know we can build crazy internet money, and we don't have to have names or things like that, let's make this crazy internet money useful. So let's introduce the concept of the smart contract. And that's what we did with Ethereum in 2013. And that revolution's just been great. And Ethereum has shown all this magic at the end of the rainbow of things you could potentially do. But then the great magic has been a bit dampened by the evils of CryptoKitties or these types of things. We're starting to really understand that we have serious scalability concerns where we're not going to be able to build a world financial system with 3 billion, 4 billion, 5 billion users if a single viral application destroys our entire network.
How early did you notice that with Ethereum? How early when you were building Ethereum in the early days?
We always knew this was going to be a problem, but remember, you do things in generations. You don't wake up and just be like, I'm going to do everything. If Satoshi had launched this hyper complicated system with voting and proof of stake and all these things, Bitcoin would have been a failure. It would have been too hard, too complicated. Let's start as the simplest possible experiment and win the psychology war. Then Ethereum was saying, let's get people to psychologically admit that we can do more with our money than just spend it. We can do contracts with this thing. Okay, now we have the freedom to imagine. Now we're at the point where everybody has gotten to the point where they say, we really need to solve some basic problems before this can grow to a practical system. And that's what Cordano is basically all about. It's the first of our vision, the third generation cryptocurrencies. And in those three practical problems we focus on, one is scalability. And that's easy to define, hard to solve. BitTorrent is a great example of a scalable protocol. Ethereum and Bitcoin are not. With BitTorrent, when you add users to the system, like when more people are downloading Game of Thrones, you get Game of Thrones faster.
Right.
Okay. So first you have to have a characteristic that your system's performance grows as you gain users, and both transaction processing capabilities, your ability to move around data, and your ability to store that data. Because eventually these blockchains are just going to get gargantuan. They're going to get petabyte scale, the exabyte scale. They'll be victims of their own success. And if you can't shard that, you're vastly increasing centralization to fewer and fewer and fewer people. Second, you have to be interoperable. There's going to be thousands of cryptocurrencies. IOHK is a protocols company. We wouldn't specialize in eating that broccoli if there was ever only going to be one company or one cryptocurrency. We're not Blockstream where we wake up every day and just lie to ourselves and say the only thing is Bitcoin and there's only one configuration and that's going to be everything and everything else is wrong. It's very stupid. You're still going to have Ripple, and Ethereum in some way is still going to be around, and there's going to be ZenCash, and we're going to make that great. And there's going to be a lot of these things floating about. And so as a consequence, you have to talk about meaningful relationships between tokens in terms of the ability to move value between them and information between them. Right now, tokens are blind, deaf, and dumb. Cryptocurrencies are blind, deaf, and dumb. They can't talk to each other. So interoperability is all about how do we get them to talk to each other, and how do we get these things eventually to talk to legacy systems like banks and like exchanges, because we tend as a community to interact with these guys. And we interact with them on a case-by-case basis with no guarantees about that interaction, which seldom means that we get a lot of privacy or security or any transitivity of the principles that our underlying money has. It's kind of funny, Bitcoin has all these great properties until you give it to Bitstamp and Kraken and Coinbase. Then it's basically a less valuable version of fiat in that perspective, with less stable entities than JP Morgan Chase, and in some cases less privacy than those institutions. So interoperability is super important because it's a big discussion about how do you move value and information around between everybody, and how do you move that value and information around where you still can preserve those principles and privacy and other properties, and also allow those people to still do their job that involve metadata attribution and so forth. Now, finally, we have sustainability. Now, this is the last one, but apparently it's, in my view, the most important. It's okay to build a system with 1 billion users. It's okay to build a system to talk to everything. But if that system has no way of paying for its bills outside the patronage of a small group of dark lords in the back, it's like you have a Sith Lord or something ruling you. You're never going to go anywhere. And second, if that system doesn't have a governance system to decide where to go, how to upgrade, what to do, then you will build a cult of personality around a group of people and trust them as the leader. This is very common in open source software. You'll hear the title beneficent dictator for life. And that works when you're a small system and it's just you and your friends drinking beers on the couch. But when you're talking about something that ought to be a drop-in replacement for a money system of a country, you cannot rely on one person to control that. We have it right now. It's called the US dollar, and the US government doesn't do a very good job running the world. And we see a lot of problems and a lot of issues there. So the scale as a sustainability component is all just about governance. So that's about voting. It's about incentives. It's about treasuries and these types of things. So those are the 3 design focuses of Cardano as a product. We have a huge team of people right at Haskell. We build it with principles. So we use peer review and formal methods. And we started in 2015. So there's not a new coin that suddenly came out of the ether. And, in 3 months, we've achieved all this value. The reality is we've been designing and building for a long time. And we got it finally to that minimum viable product state in September of 2017. And now we're rapidly iterating and rapidly improving. And we're going to have lots of releases coming out this year, from smart contracts to delegation and stake pools. And our system will just keep growing in scale and complexity as we feel a high level of assurance that those features and functionality work properly.
Fantastic. So your company, IOHK, stands for In Out Hong Kong. How's that funded?
Well, so it's like a gold rush, and we sell the picks and shovels. So basically, we get paid build cryptocurrencies or work on existing cryptocurrencies. Like we have a great deal with ZenCash. And we provide development services, research services, and that's basically like a software consultancy or an industrial research group.
That's wonderful. So is the ZenCash blockchain paying the company? Through that. So, isn't that fantastic? You got blockchain
crazy,
paying
right?
Blockchain.
In fact, so cool. This is our first treasury contract that we have, and boy, that is so amazing that like an open source product with principles that only cares about one thing is now paying a company to go do that. as opposed to a bank or an exchange or these other guys. So we can say everything we do is open source. We don't pursue patents. They're like, that's great. We don't pursue patents either. Can't own them. Yeah, so that's so cool to be able to do that type of stuff. So we also get paid some tokens in the underlying chain.
Yeah.
So, you know, in the case of ZenCash, there's all tokens in the chain, or in other arrangements, it can be fiat or Bitcoin in addition to the tokens of the protocol we built. So, you know, if we're really good at what we do, we make a windfall. If you know, we're not quite as good as what we wanted to be, we still get paid for time and materials with a little bit of a margin. So it's a great business. We've grown from 2 people to 100 people. We operate in about 10 countries. And we started with no venture capital backing at all. So my co-founder and I, we still own 100% of the company, and we have about 9 figures of revenue as a company. So
wow, fantastic.
So I think we're like one of the most successful startups of all time, given our age. But by the way, you know, another great company nothing but revenue. That was Microsoft. They didn't take any venture capital money until right before they did the IPO, just because they didn't know how to do an IPO. And so they needed somebody, and they're like, what the hell are we doing? Let's go have somebody pay us for the privilege of doing our IPO. So they went and took some money to get the relationships and to do that. And we're growing much the same way, where we just take contracts, and every time we do it, we see ourselves go larger and larger. I get less on the sleep. I get fatter. Travel to more places.
It's important to look after yourself, man, during all, you know, it gets busy and crazy, but you need to jump on that treadmill every so often. So let's talk about the crypto economics quickly of Cardano. How does that deviate from any other token that's out there, or some of the best, you know, the top 5?
Right. So if you're talking about a world financial system, you're not going to have one token represent that entire world financial system. So you have to talk about different classes of tokens that are required. Now, what ADA is basically a very similar monetary policy to Bitcoin. So it's deflationary in a respect. There's a cap. 45 billion is the theoretical cap, but I think we'll scale it back if we can. It just depends upon our game theoretic research that we do. And we have a distribution, and it's actually very fair distribution by the way it was distributed. It's like started with 10,000 people, and most people had small amounts, several $1,000s worth, not a bunch of whales with millions of dollars worth. And if you go to cardanohub.org, you can see that distribution in the transparency section. And basically, the token represents the staking consensus and voting for the system, and will likely be used as a bridge currency when we become a multi-currency system. So it'll be that trading pair amongst all currencies that are traded on our system. So our hope is to have decentralized exchange, and it'll also likely be the token consumed for computation as a service. So when we support smart contracts, it'll also become gas and fuel. So it's important when you have these things, you understand what the base unit is, which kind of keeps the whole system together. And the way we design our consensus algorithm, we're going to be able to merge stake multiple blockchains concurrently. So we'd like to, in the future, launch other chains that have tokens that do other things. In particular, we're really interested in a value stable currency. And either that is something in its own right or something built as a derivative of ADA. But basically, that would be something that has the value of the dollar, so it's pegged to it in some way. But it's pegged to it in a way that is decentralized, and it's not like Tether. It doesn't require a central promise. Then we can do lending with that, remittances with that, and it can become a drop-in replacement for a national currency and have much better monetary policy than most countries in the world. So that's an example of a token that we're interested in that ADA could enable through the future. The other things we're interested in are infrastructure tokens. ADA could actually act as a stand-in replacement for that, but things like incentivizing, like file storage and so forth, may require its own incentive scheme and so forth. So we're real interested in these types of things, but ADA is kind of the basement token, the foundational token behind all of that, and it's going to enable that entire system. And if anything, is a bridge currency for a decentralized exchange, we think it's quite valuable in its own right. The ability to control the treasury, the ability to control consensus, and derive some revenue from that as well. That's a valuable proposition as well.
Yeah, it's really cool. I love the fact that DAOs can pay for external resources, I don't know, swag and promotional gear, but also projects, maybe like digging a well in somewhere in Africa. I don't know, like that you can do anything with these DAOs, and as part of the project, sponsoring cool things. And I just find that so cool that we have this living digital organism that's sitting there paying humans out to both secure it, but also help it grow in terms of a network effect. Amazing.
What's so cool to me about it is like software is a manifestation of one's mental will to solve a problem. You have this problem, and then you dream up of an algorithm, you dream up of a solution, a program, and then you write all this code, and then somehow it runs. And we've built these devices to capture that construction, computers, and they just do it. And so when you look at these protocols, they're basically protocols built around philosophies. They're protocols built around this ideal world we'd like to live in. So we'd say we'd like to have private money. Or we'd like to have, infrastructure that's owned by the people. We'd like to tokenize natural resources, whatever that might be. You're basically wrapping that in a protocol, and now you have this mechanistic encapsulation of philosophy. And you can then go work for that encapsulation of philosophy, which means your money is coming from the purest possible source. Yeah, I'm a great fan of math, the history of math, and there's plenty of mathematicians who kind of just got tired of their system. Like Grothendieck is the ultimate example. This guy, smartest person probably of the 20th century. And that says a lot because we had a lot of really smart people in the 20th century. But if you read his writings and you see the depth of what he could do, this French mathematician was just like next level algebraic geometer. And he got the Fields Medal, which is Nobel Prize of Math, and he did all these amazing things. But he was a deeply principled guy. So when he found out his university was getting money from the military, he's like, no way, it's the funding source or it's me. You guys make your decision. And then they, of course, chose their money. So then he just left all of mathematics, not just the university, and he exiled himself. And he lived for like decades in wearing a house robe and looking like a math wizard and like Luke Skywalker in Last Jedi style in exile, right? And he died a hermit. So imagine if mathematics, we had a system like QAditas or something like that, where you don't work for a university, you just write proofs for a blockchain. Yeah. And you have this global open source commons, and then when you want to solve a problem, you just get a funding ballot, and your peers, bet on you and say, yeah, we think that guy is pretty good for solving the Riemann hypothesis, Goldbach. And now your money, your entire revenue stream just comes from working for a concept, as opposed to an institution that has multiple needs and demands and can never be what you want it to be. That's a new economy. It's never been seen before. It's so cool, and I'm just glad to be a foot soldier in that revolution, like all of us.
Oh, and we're glad to have you, and I totally agree. Also, Nikola Tesla died a homeless guy,
right? Like he wanted to do
by the foot of JP Morgan.
He wanted to do a wireless communication system, and JP Morgan was giving him money. And then they said, oh, well, you're not moving fast enough, so we're going to cut you off. Could you have imagined if he had funding from a reliable source? He could have explored for 20, 30 years all those ideas and given us a much better future.
Wow. Thank you. Look, I know you're very, very busy and you have to run. So thank you very much for your time, Charles.
I will stay on for a few minutes with Rob because I'd love to talk about ZenCash. Because
yeah. Let's bring on Rob. Absolutely. Robert from ZenCash. Viglione.
Hey, guys.
Hey, Rob, good to see you, man.
Yeah, you too, Charles. I'm liking the beard look there. The kind of shaved beard look. Yeah, exactly.
Proportional to the length of my beard, so everybody's like, "You're gonna look like ZZ Top now, right?"
It's a great thing to stroke when you're thinking,
right?
Which mathematicians generally do a lot of. So it's good to have one of those beards.
I once walked into a tree in the Norland Quad.
So let's talk about ZenCash. ZenCash is also an amazing protocol built on the ZK Snarks concepts that Zcash brought out, plus the work that Dash, also formerly known as Darkcoin, was working on, with having a DAO paying for, exactly what we were talking about with Charles, a DAO paying for not only, the blockchain doesn't only pay the miners, but also pays for swag and for education and everything else. But also, you also have a voting mechanism for protocol upgrades. And mixing it all together was ZenCash was born out of that too, which I find really fantastic because it's a much deeper form of privacy. Robert, why don't you introduce yourself quickly?
Yeah, sure. I'm Rob Viglione. And so actually one thing that really resonated with what Charles said was we're finally at a point in history where we can build protocols and systems that are built around a philosophy. And that's the way that I see Zen. Even the name itself just shows you that we're kind of building this around a philosophy. And to me, the philosophy is kind of everything we were just talking about: liberty, freedom, peace, right? Just a better world, more voluntary society, where now we have people that can voluntarily come together around the world for peaceful economic systems that are actually consistent with your values. So that I like I'm also extremely excited and proud to be a foot soldier in this revolution here, the most peaceful, productive revolution in human history.
It really is. And I totally agree. I've said it before on the show where I just love the fact that we live in a time where we can try economic theory out in the wild without gulags. And it's just stunning. You can just, launch some sort of economic theory based on a coin. And it's really...
Well, Josh, like the pushback hasn't started yet. So be careful what you say.
That's true.
Exactly.
So Charles, your company, IOHK, is also working with ZenCash. How was that relationship built, and where did that come from?
Well, it started with a personal relationship with Rob and I. I really like Rob and Rolf and Jane and a lot of the people on the ZenCash team. They're great people, and I met them at Consensus years ago, and we just said, hey, what are you doing? They said, oh, here's what we're doing. And I said, I've always wanted to work on a project involving snarks, and a project that has an excuse to pursue something like a directed acyclic graph architecture. It's something that we haven't quite done yet as a company. And, the Cordano scale is gargantuan. It's like a huge project, whereas Zen is very focused, and there's a couple of immediate things that could be done to really start delivering on that idea of private money.
So wait, is Cardano also working on a DAG?
Well, yeah, we'll get to that. So your third generation, that doesn't automatically mean first and second generation just die out and they're completely useless. Like Bitcoin is always going to be here. It's first gen. It's probably never going to be more than that, and it's going to become a digital commodity. And similarly, the second gen guys, maybe they're just digital commodities with smart contracting features. That Ethereum Classic could very well be that. So we said it's perfectly okay for us to work on a diverse palette of cryptocurrencies. They don't all necessarily have to be like Cardano, where they're universally interoperable and they have super duper scalability characteristic features, and treasuries is like unbelievable. Let's just be principled in that we can research one particular class of problems and try to solve a lot of those problems. That's universally useful to everybody. And then those systems we solve them for, they can compete in their domain, in the Moneros and the Zcashes and others, and be quite successful. So we, as a company, wanted to work on a project with snarks. And we said we'd like to think about snarks, everything from verified computation. That's like Geppetto and Pinocchio, Gentry's work at Microsoft Research. And snarks with the perspective of privacy, which is saying, like, what is the nature of privacy in a very holistic sense? So privacy is not just removing linkability from a transaction, really making them fungible. It's also about hiding the inputs, the outputs, so people can't prioritize transactions. Say, I don't know who sent this, but I know this one at the top is the most important. Let's go find that guy. And also the network side of things, which is how do you have a network where it's hard to discern who's on that network, who's doing what on that network, or what this network is even about. Because you're going to have things, the net neutrality debate is a great example of that. And also the Chinese firewall is another example where not all packets are created equally. And if some of your packets carry liberty, certain people don't like those packets and will get rid of those packets, as opposed to those packets that carry other things. So IOHK's relationship with ZenCash started really organically, where I first came on board as an advisor, helping them with structural things and occasionally day-to-day advice. And then eventually they said, hey, wouldn't it be great if there's some new tech that we could put into ZenCash that's super duper cool, like for example, Spectre and enhancements to snarks. And we're like, wow, that would be great. Let's see how you perform for a bit and how the team comes along. And we'll just stick around and contribute code and things like that for 6 months. And if this relationship solidifies, then we'll come along with you and help you do that. So there's already some fruit out of this. We're going to be setting up a snark lab at University of Edinburgh. And we're right now recruiting people for it. And the purpose of this lab is kind of two forks. One is Cardano-related things, where we're studying verified computation for private offline smart contracts. But also it can be used for exactly what it's being used for ZK snarks and Zcash and ZenCash. And there it's a game of how do we make them more efficient? How do we make them more concise and get better properties about them where they can become better money without compromising the liberty component of it. The other side is that we really want to work on something that's a DAG. And there's lots of DAGs, right? There's IOTA, and there's like Hashgraph, and Ghost actually is a DAG style architecture in Ethereum.
Byteball, and Yeah,
Right.
IOTA is the big one at the moment. It's a very fascinating project. And it's some very smart minds working on that too.
Right. So briefly, what we want to do is we want to research Spectre, which came from Avi Zohar and Yonatan Sambaplinsky, and extract from Spectre a specification and see if we can pull it into a production cryptocurrency like ZenCash.
Now that's not the CPU floor, Spectre.
No, Spectre's a little bit older. So Spectre's the upgrade for Ghost. That's the problem, is that you come up with a super cool name for your product. Somebody steals your damn namespace.
For the worst bug indexing.
Yeah, Josh, we wrote this programming language called Plutus, and we thought we were so clever, like, haha, the Roman god of wealth. This is the perfect smart contracting language for money. And then there's some damn debit card or something like that that's going around. Everyone's like, you guys are partnered with that debit card thing? And like, no, it's a programming language. It's totally independent and so forth. So if you Google Spectre Avi Zohar, Avizohar, basically it's the upgrade of the prior work that they did, which was Ghost, which was what we used in Ethereum. The point is that you can make many blocks in parallel, and that you can have a different way of structuring data and structuring transactions so that you can get as much scalability as possible. And your entire network reaches eventual consistency, but you don't necessarily need to have strong consistency in the beginning. And so this is something like, how do we build different ways of representing data and different ways of representing transactions so that ZenCash can be like a true and digital private money? Yeah. When they get 1 million users who enjoy liberty, they actually have a network that can sustain 1 million users who enjoy liberty. But that's a big challenge. It's going to be something we have fun with.
It goes back to what you were saying before, that you really need that network effect to and a protocol to scale. The more people that use it, the faster it gets. And I know with IOTA, it's similar, where you put you put in way more work than you take out. So is that the same sort of principle? You're working with the sort of Hashcash stuff that
right. Well, with mining, you kind of have a few parameters that you can adjust to speed up the system. But the one that's probably the most prominent is block interval. So Bitcoin has a 10-minute block interval. All right, so this wasn't chosen randomly. It appears that Satoshi actually did some data science work, and he realized that if you decrease the block interval, the probability of two people finding a bad block at the same time, or I'd say equivalent blocks at the same time, they'll be different, their hash value, but they basically are both valid, is going to increase dramatically. Okay, what does that mean? It means that you now have a competition, because one part of your network sees Alice's block first, and one part of your network sees Bob's block first. So one part thinks Bob is the leader, one part thinks Alice is the leader. Now, what Toshi said is that for this block competition scenario, some people are going to work on Alice's block, and some people are going to work on Bob's block. And whoever gets a block built on top of their block first becomes a legitimate blockchain, and that other block gets discarded. So that means all the work, let's say, Bob did is wasted. And all the work that people invested to build on top of Bob's block is wasted. So orphan blocks are real bad. It's not a good thing.
Is there a way you can pay orphaned blocks a part of the block reward or something like that?
Well, that's exactly what Ghost was all about, which said, okay, hang on a second here. Why don't we call these guys uncles? So there's this guy, but we have these uncles. And we're just going to pay all of them, right? So we'll give the primary chain, the longest chain, we're going to give them the bulk of the reward. But then these like other blocks here, we're still going to put them in, because they're useful, and they're going to be approving different transactions than Alice's block. And we're now not wasting as much work. So what does that mean? We can shrink the block interval. All right, so we can go from 10 minutes to seconds, to maybe even sub-seconds. And the whole network doesn't have to see all the blocks before we get working on the next block, because it's okay to build in different directions. Now, the problem is that it turns out that Ghost wasn't enough to completely solve this type of problem, whereas Spectre is an attempt to take it on steroids and put rigorous mathematical foundations behind it, build a whole theory of how you can build this web of blocks instead of just one chain. So we're real interested in studying that theory and seeing what the good, the bad, and the ugly are. And if it's good enough for Rob and the ZenCash team and for the ZenCash community, finding a way to get that into ZenCash so that they can have like super fast confirmation, super fast blocks, tons of transactions, and be, real money with principles and privacy.
So is there any technology taking this almost Merkelize the Merkle tree, send the hashes, figure out everything back from there instead of sending the whole block across the network.
Right. Yeah, so you don't have to send the entire block to be able to understand what's going on. You can always send compressed representations of that, whether that be a zero-knowledge proof. That's what we do with our sidechains protocols, like our non-interactive proofs of proof of work. It's another thing we'd love to put into ZenCash. We think it's a great protocol. Really nice, lightweight clients. Yeah. But then the other thing that we think about can be like authenticated data structure, the most simple of which are Merkle trees, where you just little root, you send it to somebody, and you can have arbitrarily large data set in your lead. It could be gigabytes or petabytes in size, and that little root can validate any path in that.
Beautiful.
So there's a lot of these ideas floating about. And what's exciting is people study these ideas. We're not cryptocurrency people. You know, the authenticated data set structures live long before cryptocurrencies. So the guys who are experts in this theory are just now starting to realize, last few years, that their work is now super useful for monetary applications, and they're coming in and writing great papers. Like we saw one, for example, authenticated data structures generically out of University of Maryland with Miller and a lot of other guys, and wonderful ideas there. And there's more ideas floating in. So as they come available, then you could take them in, and they give you lower cost wallets, and also the ability to know the state of the network without necessarily having data propagate throughout the entire network and so forth. Anyway, I have another commitment. I'm already over time, so this has been a heck of a lot of fun. I'm sorry, Rob, we didn't get to have a longer conversation, and thank you guys so much for your hospitality. I got to get going.
Wonderful. Yeah, thanks for. Yeah. Sorry, Rob.
Oh, I was going to say, I'll see you next week, Charles.
See you next week in Portugal. Cheers.
Yeah. Yep. Cheers, Charles. Thanks for coming on. So, Robert, yeah, wow, it's blowing my mind. You know, the speed of transformation and evolution that's happening in this space is so quick, and I think it comes down because there's true competition. And you know, a lot of the time when I'm talking to especially staunch statists, it's generally if you have a state of some sort of anarchy, you're going to have monopolies. But we can see, you know, the crypto sphere is a state of true anarchy. Anyone can start a project. No one needs permission. They just do it. And what are we seeing? We're not seeing monopolies here. We're seeing a plethora of projects, and really good projects, all taking on different slight angles. And then, of course, you have the whole sea of shitcoins that are just bubbling away like a little casino down at the bottom, penny cryptos. But at the top, we're seeing bubble up some really, really fantastic projects and some very good mathematical talent. Like Charles Hoskinson, like yourself, building on amazing projects. And I think it's just so great to see that cryptocurrency can pay people that we usually paid, especially mathematicians, like we were talking about before, or cryptographers, who are always paid by the state, generally, for research, now can be working on really liberty-focused ways to move society forward.
You know, actually, that was the first time that I thought about that concept of academics being paid by a protocol with values over the state. I have to say that blew my mind. I think that that's absolutely the future, and that is the promise. But I think the bigger picture is this all comes down to permissionless innovation. So I completely agree with you. I even question the fact of whether, or question the notion of whether we can even have monopolies in a fully unconstrained market. I don't know. You know, I've sat through too many PhD economics courses where they kind of, you know, just assume that some mathematical construct, if taken to the extreme, like efficiency, would just mean you're going to have one dominant firm just control everything. But I don't think that's reality. I think the reality is you take off the constraints and you will always have fluid dynamic competition just shuffling things up.
Yep, absolutely. So let's quickly go through those same questions about ZenCash, because I find it a fascinating project, and I think, you know, I really love people to go through these steps as they're evaluating projects, because just to save themselves from you know, just falling for some really good marketing team. You know, I've seen it so often where someone says, "Oh, I've invested in X whatever." Some coin, and you say, "Oh, right, I've never heard of it." Yeah, but you should have heard the presentation, and it was some amazing sales pitch. And you're like, And then you look at the GitHub, it's just basically a clone of Bitcoin with one little thing changed, and that was it. And no commits for like 8 months. So you just know, dude, total flags all over the place, red flags. So I like to educate our audience how to find these red flags, what to look for, but also how to find the green flags. So so what are we solving here with ZenCash? Why do we need another token? Why do we need another way of looking at this this space?
Yeah, no, I think we need 1,000 different ways of looking at everything. So I think we need that type of massive iteration and permutations of kind of parameters, permutations of goals, objectives, values, teams, right? So that's what we bring to the table. A different take on snarks, a different take on where we're trying to bring the project, a different take on economics, crypto economics, and a different take on how you form an organization in a distributed manner around the world. Even our concept, I think what makes Zen interesting for me is we're experimenting with both technology and economics simultaneously. It's not just kind of pick one dimension and try to, optimize that. I think we're doing a great job at pushing the envelope with crypto economics, where even for our team, once we implement our treasury voting system that IOHK is prototyping for us right now, that's going to make our team competitive with anyone in the world. So I don't want any system where anyone, including ourselves, has special privileges that are just locked in stone, right? Just because we're the founders and we're the first team doesn't mean that we should bar others from potentially competing to take away our jobs. So that's one thing. I envision this world of multiple competing teams, constantly trying to improve a system. And what's important is improving the system, not extracting value for ourselves.
Yeah. Oh, extremely important. Extremely important. I kind of see, in the early days of Bitcoin, we had a lot of scammers basically building online wallets and stuff like that. And now those people who would just basically steal everyone's tokens and coin and stuff back then, and it would annoy the hell out of me because guys, there's a massive, amazing revolution against the entire banking infrastructure, and you're there stealing people's bread money. It just sucks. But so and now those people have gone into creating tokens and coins and these, so
I have to say, the lack of ethics for so many participants in this industry is extremely disheartening. And but at the same time, it's an opportunity for us to get our shit together as a community and self-regulate. Right? We don't have to go screaming to some, big brother to go and fix things for us, in which case we're just replacing some scammers with another gang. Right? Like now we have the opportunity to just show the world, hey, we can do this ourselves. And then unfortunately, the downside is not everyone has the ability to discern the signal from the noise in the market. So my big push this year, like right now, we're working on what we call Operation Radical Transparency, which is, I'm tired of the opacity in this industry. I'm tired of the scammers. I'm tired of how difficult it is for people to, know what teams are doing. First of all, it's just unacceptable that a team could raise tens of millions of dollars and have no accountability for what they're doing. Right. That's the perfect situation for scams. And of course, you're going to see the incentives there is for a flood of scammers to hit the industry. But now what I want to do is I want to create I want to lead the way, and I want to create the gold standard for transparency, where we create systematized transparency that no other project has any excuse not to adopt themselves.
Fantastic. Right. That's exactly what we wanted to do with Vaultoro. That's why we started Vaultoro as well, is to try and have radical transparency in a more of this allocated space. And that's fantastic to see. So let's talk about the transparency a little bit in terms of the GitHub. How many people are working on the team? What's the caliber of the team? How far are they spread around the globe?
Yeah. So actually, we're in process of a big reorganization. So the team that you see on the webpage right now, I still think is impressive, but is still only kind of a slice of what we actually have in the works for the project. So in the next 2 weeks, you'll have a much better view of who's working on the project. And we're actually restructuring things that, organizational structure that worked for 5 to 10 people doesn't work for 50 to 100. And we've just crossed that 50-person threshold. So now we have to methodically organize ourselves so that we can become efficient, and people have, we can have teams working in parallel. We have people managing different processes, so we don't have bottlenecks in decision making. We want to kind of push that decision making authority out to as many people as we can, and have as many people have the opportunity to work. So currently we have on our GitHub, we have 21 people listed. It's actually about 25 because one group has just one account on GitHub that they share. But we're adding actually 2 other developer teams to that. So we'll have 30 to 35, engineers working on this project, including, the IOHK team that they have working on 2 extremely important projects this year for us. So, I think it's going to be a very transformative year for the project, in the sense that we're going from this almost chaotic open source kind of hobby project for people, where now we're getting professionalized. And you're seeing now, or you will see in the next couple of weeks, the professional talent that we have on to our engineering team, where our products are going to go from kind of, geeky products, geeky wallets that diehard crypto people are very familiar with, to the types of systems that the everyday average user could use, or at least appreciate.
Fantastic. And what sort of action is on the GitHub? Is it being committed to once, generally weekly, or?
Yeah. So I mean, and not every commit is created equal, right? So that's actually another thing. Yeah, that's actually another thing that investors interested in projects don't just add up the commits and look at the activity. It's the first approximation, but it's not necessarily indicative of quality of commits. So we actually have a lot of code that we have been working in private repos that then we're going to dump onto the current one. So if you look at our repo right now, we're basically, 90% Bitcoin, 5% Zcash, and then 5% Zen. And the Zen things that are on there right now are the most important technical thing that we've done was integrate SSL TLS capability into the protocol, so we can have now client to node encryption, so you can protect metadata, and then some other administrative things that we just had to do, like replay protection, because we forked from another project. And then we have some more minor commits from there. But actually, the next big set of stuff is going to hit our GitHub all at once. So that's kind of the level of activity. And I think that's the model we're going to be taking. We're actually finding other projects just kind of copying everything we do. And in some sense, that's I mean, we've stood on the shoulders of giants, right? We're 90% Bitcoin code, 5% Zcash. So we want to maintain that open source spirit, where we're trying to contribute and give back to the world. But at the same time, strategically, I think, we're realizing it actually might be better to take a more scientific or methodical approach to developing code, where you actually develop things professionally, you peer review it internally, and then you release it to the market after it's been tested. Well, so that's the approach that we're doing right now.
So yeah, that's really smart, and I think it's interesting in the open source community how to sort of protect your project from just people just grabbing and copying it. You want people to copy it, of course, but you kind of want that first mover advantage as well.
Definitely. And that's how I view it is. So for us, it's a very interesting, it's like a 21st century way of doing business now, where we're not trying to extract rents from society just because we have government protection of intellectual property. But we at least want, like a few months worth of first mover. We brought something to market. Let's actually benefit from that as a project, but at the same time, give it to the world. So I think that's the approach we're going to be, where we are adopting right now.
I wonder if there's a way to show sort of hidden. I wonder if there's a way to show the hidden side of how much work is being done in the background as part of the radical transparency. That would be kind of cool.
Yeah. Well, so radical transparency is a project that takes a few different angles at once and is bringing them together. Fundamentally, the team is always available and accessible on all of our comm channels. We take pride in always being available, and just making sure that we treat our users like valued customers, not just take them for granted. But then it goes into every 2 weeks we do a live stream. It's open to the community. Anyone pops in there, and we have Q&A sessions. We tell them exactly what we're doing, what all the teams are working on. So there's transparency in the team activity. I think those are extremely important. But the next steps now are we're implementing a more formal accounting system, and we're going to have that tied to software that actually is transparent to the world real time. So you can see real time what we're spending money on, probably initially spending categories, because there's some spending that's kind of sensitive to people, right? We don't want the world to know, hey, we sent this guy in Venezuela this salary, because that could be, potentially put that person at risk. But we can say, hey, here's what we're spending on salaries for the team, right? And the next step is to prove, hey, no one's being overpaid. We're paying provably fair market rates, so everything's auditable. And then the next step after that is implementing the protocol level treasury system. So now you really have a system of accountability and transparency where you see where all of the money is going, and why the money's going there. It's not just because Rob says this is a cool project. It's because the community voted on it, and it's provably fair.
Fantastic. In terms of crypto economics, where do you sit in on that? Do you think it's good to have billions of tokens or less and more divisibility, or go straight for the smallest unit like IOTA did, or Demirage? I don't know, where there's all sorts of different styles of economic theory you could plug into this beast.
There are, there's and I have to say, so when I was younger, I guess as a younger economist, I kind of believed in efficient markets theory fairly strictly. Now I'm more of I acknowledge more of the reality of like psychology and how psychology plays into sometimes, humans don't make the most rational decisions. And you have a whole set of very well documented psychological biases. And one of these biases is that, there's a propensity to invest in a penny stock or a lower denominated stock, right? If the price is lower, the value of the company could be identical. It's just the share denomination or division is different. And people will see that and say, hey, I want to buy the $5 stock instead of the $500 stock. So there is some truth to that. And that's actually something I've been thinking about recently is, do we want to have $1,000 cryptocurrency, or do we want to have like a cryptocurrency that goes up to $10, right? You see some of these, actually, I would say lower quality projects that are, trading for a few cents, and people bid them up to 50 cents. And that's like a 10x or 100x gains sometimes on these projects. For nothing.
It's nuts. For nothing. It's funny that people focus so much on the denominator and not on the numerator. It's really it is a fascinating thing.
And I'm torn on this personally, because I don't manage this project to our price, but at the same time I'm not insensitive to the community when they're telling me the price isn't going up enough compared to our competitors. But this isn't about just trying to pump a price. And I'm not a salesperson, and I'm personally averse to trying to hype something. I'm a big believer in delivering quality first, and then talking about that honestly, and not just saying, hey, we're going to transform this $1 trillion industry. Trust us, give us $100 million right now. That's insane.
Oh, absolutely. Look, folks, for the folks at home that hassle people, hassle the devs and stuff in some of these projects, it's really terrible. Like, when's the price going up? The price isn't moving, or whatever. Or, writing memes about how the price is still. Look, the fact is, these protocols, if they're not 100% secure, if they're even 99.999999%, it's not enough. It has to be 100%. If you've got all this giant economy built on this stuff, and there is a flaw somewhere, it's going down. So give the devs some space. Now, when it is 100%, it doesn't matter if you're born in at $1, $2, $3, or whatever the economic, wherever it sits in the price. It's got a huge market to fill. So I think everybody take a breather and give the developers of your favorite project some space.
Yeah, well, I mean, do you remember the market in 2014 and 15? We had a 2-year bear market, where things at best were trading sideways, but it was a bear market. And now people are coming to this industry and expecting it to go exponential continuously, which is just unrealistic.
Yeah, it really is. And it really is sad, because it's in these moments where everything's going up is when, I'm sure everyone's experienced it that's been in the game for a while. Everyone that you've been telling for years about it starts ringing you up, and everyone starts, oh, how do I buy in? And you're like, you feel terrible, because you're like, don't. It's like the first time you've ever said no. But I don't mean don't, I don't say don't. I just say, look, we're in a very, very hot market. You're already buying at the top. You obviously got FOMO. Just make a cup of tea.
Yeah. Well, hey, this goes to the question of like asset pricing in crypto finance, which is a completely wild west where, I've had debates with finance faculty before who tell me, hey, Bitcoin or cryptocurrencies don't make sense relative to, the capital asset pricing model or the arbitrage, pricing theory. So they should have zero value. And I tell them, well, that's interesting. Mathematics at best can approximate reality, but mathematics doesn't create reality. So maybe there's something new here. Maybe there's a different type of value proposition that we don't yet know how to price. So whenever I have these discussions with people about whether we're in a bubble, I say, honestly, I have no idea. It's a very richly valued market compared to where it was a year ago, but we have no idea what the fair market value is for any of this stuff. I'm pretty sure it's not zero, but I'm pretty sure it's also not more than the GDP of the world, right? So it's somewhere in there. I think we're creating very valuable stuff, but at the same time, there's a ton of noise in this industry. Projects that are going nowhere. They're taking a lot of money from investors, and they're going to fail. And there's definitely going to be a shakeout. It's guaranteed we're going to have another bear market at some point. That bear market might be next year, might be 2 years from now, 5 years from now. I have no idea. But when it happens, you're going to see a shakeup. That's why we're trying to position ourselves as a legitimate, just fundamentally extremely sound project, team, protocol. We're positioning ourselves for the long run. We're not positioning ourselves for, we have to make rapid decisions because the price didn't go up today.
Yeah. Right. Well done. That's very, very good. So moving forward, some exciting stuff from Charles there, and I heard you mention something about DAGs. DAGs, for those folks that don't know, are a different way. We had Satoshi solve the double spend problem, creating blockchains and having some sort of system where you can trace one single coin all the way back to its root. To its Coinbase, and but DAGs have solved the whole double spend problem in a different way. That's why I find it so interesting. That's why I didn't write off IOTA at the start, because I thought it was, always being a sort of Bitcoin maximalist for a long time before starting to see some of these other projects like Dash and ZenCash and all these other things. But then when IOTA came along, it was like, wow, I had that sort of wow hit again. Like, they've solved it in a totally different way. And so, and seeing new projects come along with Tangles or DAGs are really fantastic. Let's explain to the audience a little bit what it is.
Right. Yeah. No. So I think that the innovation from Satoshi about bundling transactions together into a block and append that block wholesale to the ledger at discrete time intervals was amazing. It was a huge revolution in distributed consensus. But I think we're quickly realizing, game theory, of course. Yeah, exactly. A really amazing use of incentives to make sure that people actually are rewarded for doing the right thing. And that's the beautiful thing, is you don't have to rely on people to just be, magically benevolent or, saints or some godlike government to kind of herd the sheep in the right direction. Yeah, now we have the right incentives.
It's more incentive instead of punishment. It's fantastic.
Yeah. I mean, the punishment's built in. If you go ahead and you try to construct a malicious block, you're wasting a whole bunch of resources, and it's not going to work, right? I mean, it's a waste of your time. Right. So you're punished in a way that is just natural and organic. But we realize that we're bumping up against, scalability boundaries. And ZenCash, we're such a new project, but I'll say, because of the snarks and the high computational burden of snarks that we have, and because we've implemented another really cool project that, I can maybe talk about as well, is our secure node network. Where we actually use crypto economics to incentivize people to set up full nodes with enhanced security, so that we can have this. Right. We can have this encrypted network now to protect metadata. But at the same time, we have over 6,000 nodes on the network, which is a huge asset to the project. And we just started. I envision this to get up to 20 to 30,000 nodes, most likely the most decentralized node architecture in the world. And then if you view that as an asset that you can then leverage for other things, then opens up a whole new world of apps that we can build on top of that, like decentralized internet, distributed file storage, computational load sharing, a whole variety of things that are kind of, it's this real option set that's unbounded, leveraging that network.
Hey, tell me something.
Yeah,
just quickly, well, I've just popped in my head. Something I've been thinking about for a while, but you know, everyone keeps talking about these full nodes and the whole blockchain. And if you have all this stuff on chain, and it'll just get too large for full nodes. Is there a way for full nodes to store the blockchain in something like IPFS or storage or torrent or something where it's already just sitting decentralized, and people are running full nodes but looking at the storage which is sitting in the decentralized storage system?
Well, obviously, yes, because that's what a light client does right now, right? You've got an SPV node that's going to go reference a copy of the chain elsewhere. So the answer is yes, but actually we were just having some conversations yesterday with one of our engineering teams about using this node architecture then to do this distributed file storage system, where part of that file storage could be the blockchain itself. Certainly, what I want is I want our GitHub repo on the distributed file storage system. I don't want anyone to be able to shut down our code base, right? Yeah. So there's a whole bunch of aspects to censorship resistance that we need to explore more deeply, and a big part of that is methodically decentralizing our project by subsystem. Like you have to decompose your project to every subsystem. Or every subsystem, and intentionally decentralize that, or else the most centralized part of your system, whether that's your code base, your developer team, or whatever, is going to be a point of failure for you, or a point of where an adversary could attack. So yeah, I completely agree. We need to think about ways to truncate the data storage requirement, because scalability isn't just faster transactions. Scalability is how you actually store data. You don't want your chain to explode in size. So of course you can use different computer science techniques to try to figure out, or how do we optimize, or just keep it, what chunk of the the Merkle tree that makes sense. What part of the chain can we kind of put in archive? And we're looking at that stuff. Or can we offload the whole thing to an IPFS type system? That's all part of scalability research. And that's actually, so going back to your original question about DAGs, we realize that there's scalability issues with blockchains, and we're actually kind of seeing some of these limits ourselves, even though our project is so new, and I would say not very well publicized yet. We kind of just came out of stealth mode last month, and now more people are starting to hear about us. But because we have the secure node system that is leveraging, we're constantly pinging our nodes to verify that they're up, and we're just sending payments across the network in bulk. We're realizing, like, we already have to really think about scalability. And then you can go and you can modify some parameters of your system, like your block size, right? You can kind of play around with some of these things that just help you scale linearly. But the next stage of this is, can we actually implement a better architecture from the ground up, like a graph system instead of a blockchain system, but we still retain the beneficial properties of a blockchain, right? Blockchain shouldn't be, kind of a faith-based system where, because Satoshi did it, that's the way we're going to do it. It made a lot of sense. It was a huge revolution in distributed consensus, but can we do better? And we're seeing some projects like IOTA, like Byteball, and these other systems, Hashgraph, that are starting to experiment with the technology. So one of the first things we want to do with IOHK, which we're starting right now, is looking at the most promising graph architecture to essentially, the real basics of it is you want to do things in parallel. You want transactions to validate other transactions, so you don't have to bundle them together and have some other, append mechanism, like the whole mining process, right, in blocks. So that's the gist of it is, if you can have transactions validate other transactions, and the more transactions you have validating transactions, the faster the systems are going to be, the more reliable it's going to be, and you're going to scale exponential instead of linearly.
Yeah.
So
yeah, it's
that's
beautiful, and it's totally
big promise.
DDoS, independent of DOS attacks. Apart from the nodes, they can be. That's what we're seeing in IOTA there. But fantastic work. I'm really looking forward to seeing where that comes out, especially seeing a blockchain architecture turn into a DAG. That'll be a very fascinating popcorn time to watch, hopefully in a positive way.
Hopefully, yes.
Yes. Of course, everything is done on testnet first, so of course the final product will be positive once all the stuff's ironed out. But it'd be fascinating to see a blockchain architecture turn into a cyclical graph. for people that want to find out more about Cardano and about ZenCash and what you're up to, where do they go?
Yeah, I mean, so for us, the first stop is the website. We actually just released a new version of the website last week, so it's got a nice new look feel. Come check it out. That's just zencash.com. And from there, you'll be able to find all of our communication channels. The team's on Discord, all the time, and we have an extremely active community. I think one of the biggest features or assets of our project is we have just a massive, very positive community. We have at minimum over 25,000 people right now in the community across all of our communication platforms. So it's a very vibrant, active project and community. And people are very supportive and helpful. So you have an issue, and I'll tell you right now, our wallets are kind of the first generation style wallets that are meant for geeks. In a couple months, they're going to be really hot, user-friendly wallets. But if you have issues with them right now, like the average user may not be very familiar with a core client, so come into our Discord channel, right?
Yeah.
We're always on Reddit. I make a point every day. I get on Reddit, Bitcoin Talk, our forum, Discord, right? So you'll see the team always available, at least some of us at any given time. And I think that's a really, really good part of our project.
I think so too, and it's actually the fourth point usually that I bring up as well is for folks when you're looking at projects, look at the community. How big are they? How passionate are they? Are they just a bunch of marketers and nothing else, or are they actually just really human beings that actually are in the project for the greater good of humans instead of just some greedy punt or pump? Fantastic.
Exactly.
And Twitter is there anything happening on Twitter?
Oh, totally. Yeah, we post to Twitter every day and respond to people. It's at ZenCash Official is our Twitter account. At
ZenCash Official. Great. Well, folks, Robert, thank you very much for coming on board and sharing this great news with the partnership with IOHK and with all the great stuff that Charles Hoskin's doing with you guys and with Cardano. And for you folks at home, if you want to stay in touch with what we're doing here at Vaultoro, we are a trading platform between Bitcoin and physical gold, where you can trade in and out and never go back to fiat, stay in asset-based money. So, and we'll be back next week with another Tatiana show. I'm wishing you guys a fantastic 2018, and I hope we'll see you soon.
Thank you very much, Josh. Have a good day.
Thanks. Ciao.